However, I would say in the past, these kind of bank analysis people who work in research have been regarded as a little bit sensationalist, but now, because the public are used to these increasing levels of inflation over the recent few months, they're starting to be taken very seriously. And if we look back over the last year, their analyses have been quite accurate. So it's entirely possible. However, there is the word could hit 18%. Nobody's actually said it's going to, but it is at the moment at a 40-year high in many Western countries, not just the UK. So, and there doesn't seem to be any way that the quantitative easing policies have stopped this happening. So it is entirely possible that it might rise. But of course, the most interesting thing, I think the thing we should all be looking at here and finding a solution to, is the potential interest rate rises that would ensue. Because going from 1.7% interest right now, which is still reasonably low, actually, compared to 1991 when it was 15%, but if it goes to 7.5% in today's climate, that is more likely to have a serious implications on the traditional economy, I would say.
In what ways, Andrew?
Well, if you have most Western markets, the domestic economies are based on mortgage borrowing and personal debt and business debt. So you have serviceable loans and serviceable finance and lines of credit granted to businesses and individuals, which are then repaid by monthly revenues. So if they go to a point where a company cannot pass on its extra cost to its customer and the cost of borrowing rises, then it becomes even more difficult than it already is. And there's already a situation where cash is very tight for many people across the country.
Okay, and that could mean companies going out of business, it could mean redundancies, unemployment.
That's right. So I think the interesting thing here is that the traditional economy, the centrally planned economy of central banks and traditional companies that are centralised, is what's being looked at. But it's really, there are alternatives nowadays. We live in a technological age. So perhaps the old economy, if we want to call it that, which is the centralised economy, is now showing its legacy position, where it's maybe time to look towards other alternatives and spreading risk. So, for example, lending, if interest rate goes up to 7.5%, then it's going to be very difficult for people to service their existing commitments, including companies and including private individuals. So maybe we should be moving away from a debt-based economy and more into something like an exchange-based economy, where you tokenize something and exchange it for something else, and therefore reducing the need to be in any form of personal or commercial debt.
And in terms of energy bills and the pounds in people's pockets, I mean, it's expected to top now £5,300 in April of next year. Now, at the moment, we've got that price cap, which is what that is in April next year. Now, is that even enough at this point? It's not doing what it's supposed to be doing, which is protecting people.
That's right. In France, there was recently a law made where the government capped rent increases and capped energy increases. So there is some. They even put the price of fuel at the pumps down. So that's something positive in France. However, in the UK, where it's really high still, if it does go up to that level, you're talking £600 a month on average for an energy bill. So it's very, very high. And of course, last year, a lot of energy companies, 35 energy companies, there was a lot of open market competition. 35 energy companies exited the UK market very quickly in September last year. So now there are just a few, and it's got to the point where it's very expensive. It's a big concern. But I think there are ways of spreading the risk. Yesterday, for example, the British pound it's been on a downward, very steady downward trajectory against the US dollar over the last few months. But yesterday morning, at the open of business in the UK trading session, it went really sharply down to the lowest it's been in a whole year. So I think confidence in this, what they call the fiat money economy, is starting to become very, very shaky.
You don't